Good old J Pow Day. Gotta love it. Another day, Jerome Powell is setting up to do the good old ruggy doodlah. And of course, we have data. So we've got a little bit of data to look at today, starting with the ADP employment report, which does come in softer than expected on the ADP report. We'll go through the ADP report. We're going to be looking at wages in particular to see how wages are moving. Most specifically, if you haven't seen yet, we've got a full summary of Super Tuesday out on the main channel. You could watch that video, break down everything we went through at Super Tuesday. Boy, yesterday that took a while. It was like 4.5 hours of Super Tuesday coverage. It's kind of fun doing election stuff though. All right, so let's go take a peek at the full-on report here for ADP. Usually ADP, really it's not that fun, given that the ADP report is often wrong, at least relative to what we expect from the jobs report. It's supposed to be a fact check on the government's jobs report. The ADP jobs report was expected to come in at 150,000. It came in at 140,000. We have and then the next thing we have is 7 a.m. We have the JOLTS report. So we'll have a little bit to go, which is also kind of annoying because the JOLTS report comes out the same minute Jerome Powell is supposed to start testifying this morning. What a mess. But, okay. So, ADP jobs report, their expectation is that annual pay went up 5.1% year over year, and that we had 140,000 jobs that came in the actual press release. Let's go through that in just a moment. Here we go. Okay. Here we are. Private sector employment really is up 145.1 on wages. We'll get into detail here on wages. Job gains remain solid. Pay gains are trending lower, but are still above inflation. I mean, I feel like at this point they're just using the same line that they have over and over again. And we could actually see here where the jobs are being gained or lost. Looks like we just lost about 4,000 here in natural resources, but construction seems to be growing here, 28,000 jobs on the ADP estimate. You've got IT minus 2,000. It's not like you've got mass layoffs here or any kind of unemployment recession. That idea just came and went so fast. It could still occur, but boy, leisure hospitality still growing 41,000. Other services 14,000. Business, services and professional 5,000. Education, healthcare 11,000. Other services 14,000. And then you've got changes by region here. It looks like the East, South, Central. So I'm guessing this would be like Alabama, maybe. Not sure if we'd be over there by Texas. But anyway, East, South, Central. Yeah, South Atlantic, I feel like would be more like Florida. So East, South, Central. Maybe more like Louisiana. Anyway, negative 13,000. That's really the only region that we're seeing some movement. Wonder if they have an actual indication on that, like East, South, Central. And then let's type that in. We'll go, how about we go with ADP jobs. Let's see if they indicate a breakdown of that. Not really. You think they'd make that a little easier? East, South, Central. No, they don't. Who knows? Maybe somebody in the comments might knows. But if it's this hard to find out, East, South, Central. Meh. Oh well. So then we've got small businesses, 1 to 19 employees. That's good. You've got growth again at small businesses. You've got 11,000 here. 20 to 49 employees, 2,000, so not much there, but the tiniest employers. And then you've got medium establishments, large employers. Pretty actually, almost feels roughly even between the categories here, smaller being the slowest. But medium and large, 69, 61. Smaller at 13, so clearly those down a bit. For job changers, year-over-year pay gains were 7.6%, up from the prior month, and the first increase since November of 2022. Well, that's not good. That's another signal right there to Jerome Powell that, you know, maybe we don't need to lower rates anytime soon. So, not ideal. I'm trying to think of that. That's actually a little bit surprising. Let me see if I can get another ADP report handy. So this one's ADP for February here. I have the 01 release, and the 01 release is right here. 5.2 for year-over-year pay gains for job stayers were 5.2, and then job changers was 7.2. 5.2, 7.2. Whoa. Interesting. Wow, look at that. 5.2 becomes 5.1. That's normal and on trend. But 7.2 becomes 7.6 for changers. Stairs. I wish they would just tell us that. But that's not great. Oh, there, somebody found it. Good job, Todd Hall. East South said, hey, my first guess was right. Alabama, Kentucky, and Mississippi. Wow. Okay. Thank you for that. Somebody is indicating we've got a Nick T article here. Let's see here. Oh, looks like, did they just release Powell's statement? We do not expect it will be appropriate to reduce the policy rate until we have greater confidence in inflation moving sustainably towards 2%. Prepared testimony to the House Financial Services Committee. It will likely be appropriate to begin dialing back policy restraint at some point this year. Policy rate at peak for this cycle. Ongoing progress to 2%. Inflation not assured. We will carefully assess incoming data. Okay, this is all pretty generic so far. Let's see here. This will be the statement that he reads. The questions he answers will be most interesting. Risk to both cutting rates too early and too fast, as too late or too little. Labor remains relatively tight. Let's see. While inflation is still above 2%, it has eased substantially. Economy has made considerable progress over the past year on its dual mandate. Yeah. Okay. Well, that's pretty generic so far on what we're getting from the Fed presser. Yeah, and the Q&A will really be a little bit more of a tell, and so we'll get that Q&A at 7 a.m. But not so good here on the ADP jobs report. I mean, this was consistently falling, and again, it's its first flip that we have here since November of 2022. And the job stayers number is the same as or the lowest that we had since August 2021. All right, interesting. Then we've got median change in pay for job stayers by firm. How about job changers? Oh, they didn't tell you that. January was revised to 111,000. Big deal. All right. Well, that was interesting. This is the first ADP report that isn't actually that fantastic, because what you have with this ADP report is an indication of weaker jobs and more inflation, more labor inflation. Inflation on changers, which is a way of expressing confidence in the economy. Very interesting. Very interesting. Mm. Yeah, it's Powell's speech, exactly. All right, thank you again, Todd Hall, for that. Somebody here says this year is almost over. Yeah, CrowdStrike had a pretty phenomenal phenomenal move there. Rob here says sold all my Tesla, got iBit instead. Can't blame that. Let's see here. You know, it's time to buy Tesla again when you see the I'm out comments. It's tough, man. You know, Tesla's waiting for rates to come down, and those Q1 numbers, I don't know, man. It's not good, but unfortunately, it still feels like worse before better. Crazy. I mean, maybe we would know if there was some guidance, but there is not. Okay, what do we have here? UK's Hunt 2.0, let's see here. UK's Hunt talking about this is their economic person. I forgot what they call it. In the next spending review, the Treasury will do things differently. New public spending proposals that deliver annual savings within 5 years. This is the Chancellor, along with what's the person? That's what it is. The Chancellor of the Exec. I think that's something like that. I can't remember. Chancellor of the Exchequer. There it is. That's what it's called. Chancellor of the Exchequer. That's it. All right, now I remember. That's Jeremy Hunt. Okay. Just trying to put together. I know he's like the equivalent of like the Janet Yellen, but I'm like, what was that second word? Exchequer. It's so weird. Anyway, that's those are just some headlines I see coming through here. Talking about the lowest effective personal tax rate in the United Kingdom since 1975. Well, that'd be nice if we had that over here in America. Expect a faster recovery in living standards from the last financial year's record decline. All right. So, hey, there we go. Yeah, yesterday I was coming back from hospital because I had to go to the hospital again. Different child. It's just like never ending. Still TBD what that was all about. It's probably some kind of severe allergy to milk, ironically. But anyway, on my way back, there's like this giant plant on fire. I could just see it from pretty far away. And I'm like, let's just go over and go take a look. It really felt like they did not have control of the fire at all. But it was, apparently it was an older, what was it? Older Sunkist plant. The wood building, which had been vacant and was being renovated, was engulfed in flames. That's always interesting to see that. It's just the sheer power of fire. It's crazy. A Californian fire, though, it's like the weekly show in California. Oh, so okay, all right. So Jolts, let's take a peek at this. Jolts come out at 7 a.m. California time. We're expecting 8.850. The prior read was 9. I wouldn't be surprised if we get another 9 handle. Like it's constant. It's always 9s. Oh, here we go. Yeah, this was yesterday. I get some closer here of that flame, don't I? Yeah, like just the fact that you've got fire trucks dousing this sucker from the sky, and the flames are still this bad. Like nobody's injured, you know. It was vacant, so it's just like an empty factory that was going through renovation. But still, it was just like, my lord, Are you sure y'all have enough firefighting capabilities? This almost looks like inflation. Like you think you get one flame out and then another one just comes up. It's like, oh, but I thought we had Jerome Powell, the firefighter, on scene, and then he shows up with one stupid cannon like this. Yeah. Look at that. That was crazy. This was like midnight last night, so a little poop. But then again, I only got out of the ER at like 11:45. So forgive me. Anyway. Yeah. Okay. All right. Where were we? So, where we were was, let's see here. Okay. So, okay, what do we got in the pre-market here? Papa Powell, eh? Everything is fine. Yeah, that is what it feels like. Hey, look, in the red zone, you just have NIO and Tesla. It's like over and over again. It's funny, you know, I talked to a lot of folks, and a lot of folks just feel married to the stock. And then when I hear that, I'm like, that's bad. You're not supposed to be married to a stock. You're supposed to be fundamentally in something or out of something. Or maybe you're not fundamentally in something or out of something. You're, you know, in something or out of something because of a trade. Oops. So, you know, those are things that I don't think are particularly wise. But, you know, what are you going to do? What are you going to do? Somebody here says, the more it dips, the more I buy. Simples. You know, that works great for folks who have excess income. For other people who don't, because maybe they're unemployed, or they're on strikes, or they lost their job, or they changed sectors and maybe their pay is lower, you know, you can't really do that. So it's easy to say, oh yeah, the solution for everybody is just buy the dip. No, that doesn't really work for everyone. So thoughts on Elon versus OpenAI's emails? It's a pissing contest, honestly. Like, the OpenAI emails, they weren't like a smoking gun. They were kind of pathetic, honestly, for suggesting that, oh, well, Elon knew it was going to take money. Like, and I think the one that does give Elon a little, you know, the one that does make it clear that there's some doubt is there's an email that basically suggests Elon knew the company would become less open over time because it would AI algo basically would otherwise become too powerful. And so I did think that was interesting. That was a very interesting argument, and that it could be misused if it was too open. So that OpenAI had always been expected to become kind of closed AI, but then that's also kind of like, wait, so you were kind of part of that shystering. That doesn't help. But it doesn't really suggest that OpenAI was supposed to go and turn into a for-profit, but whatever. All right, so Jerome Powell's testimony to Congress characterizes last year's slowdown in inflation as notable. The forward guidance around cuts is little changed. That's what Nick T says. Yeah, I don't know about that. I have to say I'm a little worried about what you have for. Well, basically, in 14 days, so 2 weeks from today, you'll have higher prices for the event that's going on June 21st. I hope you're there, but we'll have some more speaker announcements between then and now, so prices will be up. You know, you can check those out at meetkevin.com. But on the 20th, you have the Fed meeting, the FOMC presser, and the FOMC presser will come with the summary of economic projections. The summary of economic projections last time told us we would face 3 rate cuts. Well, now we're not looking at 3 rate cuts, in my opinion. I think we're actually potentially going to see them turn that down to 2, which is not good. That's just my opinion. I'm not certain about that, but I do want to see what the street's forecasting on that. Are you still fundraising for HouseHack? Yeah, you could go to househack.com/2024 and read our current PPM for accredited investors. Warrants are due April 8th, and that fundraising round ends June 30th. But yeah, absolutely. But I don't think we're gonna fundraise again after this this summer here. Mostly, as long as our cycles work, because we really want to go public with mini funds ASAP. It's such a good product for HouseHack to be creating, and then HouseHack just buys more and more real estate. So okay, well, let's get here to the Fed. Fed. Yeah, a lot of people in the industry that I talk to are like, this is amazing. If HouseHack can pull this off, it's a game changer to the real estate market and what institutional finance has done with real estate. And that's really exciting. You know, that's what other people say. But that is pretty exciting. Okay. So, dot plot forecast. Okay. Oh, really? I can't go to a forecast of it? That's lame. See, that'd be the way to do it. Okay. Oh, well. Fine then. Okay. Let's see here. Okay. All right. Let's go with, what do we have here? CrowdStrike. CrowdStrike. Is Palantir moving because of CrowdStrike? Oh, wow. Yeah, 10% there on Palantir. We'll see why in just a moment. CrowdStrike did jump quite a bit. I think we're over 20% here. Yep. 22% at CrowdStrike. That's after Q1 EPS and sales top estimates. You've got Q1 adjusted EPS coming in at 89.5 cents versus the 82 cents expected. 902 to 904 in Q1 rev. That puts you at about 903.5. The estimate was 898. Adjusted EPS for the year is actually expected to beat by about 10 cents. There we go. 387 versus 376. Okay, got it. And then 2025 revenue expected to come in at about 396 billion, 3.96 bill versus the 399. That's like 3955 versus the 3.94 expected. So it's like a slight beat. That's not a huge beat at all. It just means there was probably more doubt in the company than had been expected. So Palantir will provide U.S. Army AI-enabled command post. Said to have received a $178 million government contract from the U.S. Army. You know, I do think that's probably the next phase of AI, and I think that's very difficult to determine what the next phase in AI is, obviously. I think I'm not convinced that it's solely chip land. But I think what does well going forward are software sort of AI plays that aren't just like labeling themselves as, oh yeah, we do AI, but companies that were doing AI before AI was AI And I think that's an example of that would be Palantir. You know, this is a company that was doing big data before we really called it AI. So this is not a horrible surprise to me that Palantir is landing contracts like this, because they were landing contracts like this before we called it AI. It was just this, you know, otherwise would have been called a $178.4 million U.S. Army big data contract. Let's see here. Palantir up, what is it? Up about 9%. 9% on $178.4 million contract from U.S. Army. Okay. And this is to develop and produce 10 prototype ground stations that use AI and machine learning to process targeting information. Wow. Listen to this. From, quote, space-based, airborne, and ground sensors. Space-based. That's just scary. The eyes in the sky, baby. Oh. Ground stations are called Titan, or Tactical Intelligence Targeting Access Node. Titan. Tactical Intelligence Targeting Access Node. Boy, that's a mouthful. Hence, Titan. First AI-defined vehicle with the Army. Wow. Okay. So, I'm going to write 6 months. No, it'd probably be more like, probably about 1.5 years ago, we would have called this a big data agreement. which is fine. It's just, I think it's important to pay attention to that difference of phrasing, because it, I think, gives you a heads up of the direction that AI is likely to go. I part of me feels a little bit that the server game has been really pulled forward. Like, I'll make a little list here, like overvaluation concerns by Kevin. Companies that I think have substantial overvaluation concerns. I'll just jot some down here really quick. We were talking about this yesterday in the office. Costco, Wingstop. You know, if you're looking at forward growth, Nvidia, based on Wall Street, 4%, 4-year forward growth starting Jan 2025, just 4%. Okay. What are some other overvalued names in the opinions of y'all here in the chat? Throw some out here. I'm gonna go. Let me pull up my sheet as well. Let's see here. Yeah, and remember, software companies will have a higher peg generally than other companies. But like, for example, Snowflake, somewhat expensive, but the software companies are almost always going to be a bit more expensive. You know, SMCI is actually less so. ARM was another one. ARM. And at least in the near term, this is sort of like Kevin's overvalued index, if you will. AMD. Let me look at AMD's forward growth. That's an interesting question. AMD. I don't think it's as bad as NVIDIA. Yeah, I don't think so. I think you're at a 2.5 peg on AMD. Yeah, TSM. TSM's still at like a 146. So if I go to AMD financial analysis, let's look at AMD's growth. So forward growth for AMD is still looking decent. It doesn't have that pull forward as NVIDIA. Yeah, you're at 129. That's 32.25 at AMD. And right now you're at 56 PE. So you're only at 175 on AMD. That one's not bad. I don't see it that bad. If I then go to Taiwan Semi. Yeah, Taiwan Semi, I'm also at about a 1.5. So I don't see those as horribly as bad. Apple, how interesting. Apple's been having some pain here recently. Apple has a projected $6.61 EPS for September. We're at about 170. That means the company's trading for about 25.7 times. 9, 8.5, 12.8, 22.2. That puts us at 52.5 divided by 4, 13, 25 divided by 13. Yeah, it puts you at about a 2 peg. Interesting. Okay, so let's go to... Okay, let's go with... Hold on a second here. Let's see the suits quickly. It's almost 6. Gilts continue to lag. What is this here? Powell reiterates the next move is probably a cut. Yeah, well, I mean, that's just trying to fight the idea that we might go higher. Not going to go higher. Bonds basically flat here in the pre-market. And I should drop in here the ADP report. We ended up getting a little bit of a hot read there, mostly because we got the miss, 140K jobs versus 150K expected. But job changers, 7.6% year over year versus 7.2% in last reading. First increase since November 2022. That's kind of important. So I'm going to make a note of that. And then, of course, job stayers. Job changers, that was 5.2% year over year versus 7.1 in last reading. All right. Interesting news. Kind of throw that little summary there on ehack.com. There you go, in case you're reading to catch up. JPOW obviously at 7 this morning. That's also when our JOLTS data comes out. So we'll pay close attention to that. Let's see. Let's listen into their 6 a.m. transition here. And see if we can get a little bit of a recap. Can I get this switched? Looks like this will just take me a second. Can we do it? Can we do it? I need to tape up the little IR sensors again. You ever have that? The little IR sensors fall off on your cable? That's quite annoying. There we go. Depends on obviously where you have your cable box, if you need to like route a cable around it. All right, let's see how they start the day open.
On the Hill today will reiterate that cuts are likely sometime this year, but need more confidence on inflation, 10-year 4.12. Our roadmap begins with some Fed expectations. Futures do point to this bounce as investors seek new rate cut clues from the chair on Capitol Hill today.
Plus tech troubles. Apple is seeing what is its worst 2-day stretch since September. And if you haven't paid attention, Tesla shares, they're down 10% this week alone. That's only 2 trading days.
If they had gotten AI from, we have to go into that.
Actually, we're going to talk about that. A war of words, yeah. OpenAI.
The irony of them saying, "Oh yeah, if only Tesla had AI." It's so ironic, given that they're one of the greatest AI software suites that exists. That's actually practical, but oh well.
What he will say in terms of written words.
Yeah, no, look, I kind of want March is off the table. I think that this is obviously one of those made off the table, but I want to get a little more expansive, and I'm getting tired of the game of what month. And instead, what I see is a man who has said, listen, we're not going to have a hard landing, we're not going to have a soft landing. We got a good, strong economy, and we're fine. If it gets weaker, we'll cut. It's kind of a great central bank essay about what you need to do in order to be able to get out of an inflationary period. David, I think that he's becoming more of a let's just say, a true statesman of how to be able to do something that almost everybody thought he couldn't do, which is continue with good employment and not have a lot of inflation. I felt very bullish about this.
You do. Typically beyond that, I mean, the questioning is
Well, okay, you want to say that
most of the time not particularly helpful.
Look, if you want to say
Sometimes.
it's Greenspan-like, but I think Greenspan, the difference between this man and Greenspan is that I think Greenspan was deliberately trying not to really say anything substantive. This man has a substantive viewpoint, and he'll stick with it, which allows us to have a decent background, at least when it comes to the futures, versus the last couple of days, which have seen this level of toppiness in tech we haven't had in a very long time.
It's true. Well, we've also seen rates. Well, they've declined the last couple of days.
Well, I mean, yes, and that's why the mortgage applications are up very big. I'm glad you mentioned that. Certainly revision what we thought. You know, look, Carl, sometimes it's okay to say, look, things are really good, but did the market anticipate it? What I'm concerned about is when I see the action in Apple that we're going to touch on, I see the action in Tesla, I see the action in Alphabet, versus the action that we're getting in the banks. And that could be because we're starting to see that the regulators are starting to let up on some of the regulation. It does seem like there's a shift going on. Out of the really, really high multiple and into a Target, which had a very low multiple going into yesterday's analyst meeting, and into the Wells Fargos, which frankly had been neglected, that were selling at 11, 12 when they used to sell at 14, 15.
Yeah, two upgrades at Target, got an upgrade of Honeywell. You mentioned the banks, regulators, these reports, they're going to ease up on some of the Basel endgame cap requirements. Not to mention KRE, Jim, best day versus the market in 12 months yesterday.
Yeah, look, there are things that are happening underneath that I find are not toppy, but are substantive and what we've wanted. You know, David, look, this Mag 7 market that everybody hated, you get away from the Mag 7 market, and the money does not go over to the 5% crowd. It goes to industrials, it goes to banks, it goes to some healthcare, and it's rather pleasing to the people who have been freaking out that the 7 are breaking down.
Yeah, well, true. And most of the 7 have been. Not all. We'll get to,
Well,
actually, we're going to get to Apple in a moment.
Copilot
Amazon
piece
not.
so good.
Alphabet is. Tesla is. NVIDIA, obviously, is not.
Well, NVIDIA is...
And Microsoft is not breaking down.
We talk about the pivot in NVIDIA, but what they've done, we overuse the word pivot, I apologize for that. But what they've really been talking about is they're getting away from the traditional. They're not talking about data center, hard and fast. They're talking about verticals. Healthcare. Yesterday was devoted to NVIDIA and healthcare. We're going to have NVIDIA and financial service, NVIDIA and cultural emancipation from being American. These are all things that NVIDIA and factory, because he wants every country to have it, because what he's afraid about is jingoism. He doesn't want the Danes to have to rely on an American ecosystem. So
you're talking about generative AI for everyone.
Right. And I just
powered by NVIDIA's chips in data centers that are created in these countries.
Correct. And I think that the big speech that's coming up, I think is going to spend a little more time talking about the need to be sensitive to other cultures, not make this thing into something that's dangerous, and not make things something that is
all right. But what
acceptable.
about, you know, you've got open source, a lot of this stuff. Maybe there's a little less being released, but a lot of it has been open source, so there certainly is open source available. Meta, for example. What about bad actors? What about countries that don't have humanity's best interests?
Yeah. Okay. Let's pull off this for a moment. So it is interesting that. You have this talk about people being frustrated about sort of the Magnificent Seven and maybe finding different stocks to move. Let's take a look at some of what that argument looks like. So if you look at, for example, Google. Look at Google. Google's basically been down for the entire month of February, and it just broke a Fibby. Look at Apple. It literally stopped at the Fibby, the 169, right? So, you know, that's pretty wild. Then you've got, let's look at Amazon. You've got Amazon up at still all-time highs for Amazon. You've got Meta, also all-time highs. MSFT, roughly near all-time highs. So, interesting. Some, you know, maybe slow down in some of the growth. Wells Fargo, look at Wells Fargo. An explosion in Wells Fargo, kind of out of nowhere here, as you explode coming out of November. It's almost like everything has exploded, except certain stocks, like the interest rate sensitives. And that's mostly because, ironically, a recession would have helped the interest rate sensitives, right? So if you were expecting a recession, the interest rate sensitives would make great sense because rates would just plummet. And that's a problem. So think about this for a moment. You go, what happens in recession? In recession, you get rapid rate cuts. In recession come rapid rate cuts. Great for interest rate sensitive stocks. What happens when the recession doesn't occur? And then, like, what's the worst case, right? No recession and maybe some sticky services despite goods deflation and a bit of labor pressure like the ADP report we had this morning. What do you get? You get maybe 2 cuts this year versus 3, or the 7 the market was pricing in December of 2023, right? So now all of a sudden you go way slower on rate cuts, and that just means it takes way longer for the interest rate sensitives to actually get some love. So really that what it does is it just delays the love for interest rate sensitive, and if anything just makes it substantially harder. So it's really interesting. Whereas if you had a recession, you'd cut rapidly. And we just don't see that right now. Let's look at Atlanta Fed. Let's see. I don't think we get an update yet. Atlanta Fed, the next update. Oh, it is today. Probably after the JOLTS figure. Let's see here. Because this morning we get inventories too. We also get the beige book coming out at 11. Oh my gosh. There's too much going on today. So, and the blue chip consensus for recession is rising, not falling. You know, you were at 1% for GDP growth based on sort of the market, and now you're actually sitting closer at 2%, which is roughly in line with the Fed's estimate. It's the first time I've actually seen that in line. So current Q1 GDP estimate sits at 2.1%. And that's like the lowest we've seen, and it's still really good, far away from recession. That's kind of interesting. Okay. Chips are starting to push up. Let's see, is that true? Let's take a peek here. So you've got NVIDIA. Oh, wow. Another 2.4% for NVIDIA in this AM here. Look at that. It's crazy. So, let's take a peek. Government keeps bailing out, and Fed says we're waiting for weakness. Yeah. That is not highly untrue. That's very interesting. Huh. Let's see here. Is SMCI again? SMCI. Yeah, SMCI is up again, another 4.5%. That's comedy. So, SoFi is up 2.6. BABA up 2.6. Yeah, you can't really bet against it. It's tough. Let's look at the Qs. How are we doing on the Qs? Qs are sitting at 88 bips to the upside. All right. Very well. So, next up. Oh, Morgan Stanley just put out a little pooper duper piece here on good old Tesla. Tesla the weenie here. What is this? I want to see if I can actually find the doc. Let's see here. It's just exhausting. Okay, let's go with... See, there's a Goldman piece I was looking at yesterday. And then I want to grab... Hold on a sec. Goldman and... where's Morgan? Let me see if I can get Morgan Stanley here. Okie dokie dokie. Let's see what we have. March. Morgan Stanley. Oh. Where are you? I seek to know where you are. I cannot find you. No, I can't find that. Alright, fine then. We'll have to just look based off this. So it says here, Tesla could lose money in the coming quarters as price cuts fail to boost demand. Says Adam Jonas trimmed his price target to $320 from $345. Jonas told clients in a research note Tuesday. What's Tuesday? That was yesterday. Tesla could post a loss in its auto business this year before factoring in taxes and interest, as the company has one of the oldest product lineups in the industry. I don't know that really matters, but okay. Demand is also slowing key markets such as California or Dallas. Let's see here. Problem is hybrid vehicles are enjoying a renaissance. Hybrid sales increased 5 times faster than EVs last month. Wow. Let me see here. We had some auto sales data. Let me take a look at this. Auto, so if I go, I just want to search for this. Autos. We had EV mix was still 8%. Yeah, EV mix didn't change, even though light vehicle sales beat by 10%. So I don't know if that includes... I don't think that includes hybrids. That's just pure EVs. So that might be right. Okay. Let's see. Okay. Then, alright, fine. So, what else? Well, what else is that, meanwhile, the Chinese market is oversupplied, forcing a barrage of price cuts. It makes you want to say, like, oh, that's the time to buy, it's the bottom. But it's like, is it though? Morgan Stanley on Tesla. Alright, so, cut to 320. Cut to 320 price target, and that again is down from 345. We have barrage of price cuts in China. Most technologically advanced car company in the world. Tesla is not simply an automaker, but also a player in energy, artificial robotics, blah, blah, blah. Yes. Significant AI beneficiary, maybe. Hybrid vehicle sales increased 5 times, so that is interesting. Hybrid sales increased 5x faster than EVs in February. That is interesting. And then, of course, this argument that Tesla could post a loss. That comes at the same time as you've got this piece by Goldman. The 3 key points in this report. Okay, so this is now Goldman on Tesla. Okay, what do we have here? We believe that Tesla Rivian should be generally firm with pricing based on our analysis of the elasticity of demand. Yeah, well, that's not what Elon does. And the relative attractiveness for EV pricing for certain models. EVs are a competitive option. We remain positive on the long-term EV demand in the U.S., although recognize that EV growth is slower in the near to intermediate term. We also continue to expect strong hybrid and plug-in EV growth. Right. While we take no view that the outcome on the upcoming election, we estimate that reducing the number of vehicles eligible for IRA credits could affect 5 to 15% of EV demand, like repealing the IRA, which could affect 10 to 30%. Yeah, I don't expect that to happen, but that's possible. Illustrative price to volume overview of US market. Volume on the left, net pricing. Okay. We believe our analysis suggests that Tesla and Rivian should be targeted on additional price reductions in the US that are faster than cost downs. Right. Should be targeted. Basically, like, prices are going down faster than their costs are coming down. But you're selling to a less price sensitive consumer. Rivian is, at least. We estimate that incremental broad-based cuts to the Model 3 and Y would be negative to profit dollars, at least in the short term. And they're crushing the competition is what they're doing. So, expects additional price cuts to Model 3Y will be negative to profit in the short term. Well, I don't have a short-term mindset. That's what the bulls say. Okay. This is an interesting one. Let's see here. What else? Both Tesla and Rivian need to be mindful, in our opinion, of keeping a price tier for upcoming low-cost, more affordable vehicles that are designed with much lower build costs. See, that's interesting. Like, they're basically saying, they're warning, don't cut to where you can't introduce a lower cost vehicle like a 25K vehicle that would have lower costs. That's very interesting. These models could open up portions of the market which are not available right now. Two-row SUV named the R2 from Rivian, scheduled to start shipping in 2026. Model 2 for Tesla, nickname. Demographics. U.S. demographics and vehicle mix. EVs are likely a competitive option, at least for mid-teens of the percent of the U.S. market. You're currently at 8%. Right. I agree with that. I think that 8% could grow. Current 8% EV sales of light vehicle sales could double to 16%. I agree with that. Better charging access, better service, support, fine. Most vehicle sales, about 70% in the U.S., occur at a price between $25,000 and $55,000. Average price of a new vehicle in the U.S., including incentives, $45,000. Okay. Tesla's continued to reduce its prices. Okay. In Q4 2023, its consolidated GAAP EBIT margin has declined from 16% to 8%. Yeah, as gross margins have gone down to 17%. And then there's a little bit more analysis here, basically, on how they don't think price cuts are the way to do it. The monthly cost of a loan or lease has significantly expanded since 2019. Lease payments up 31% from 2019. And so are mortgages. Well, like loans. Average monthly payments have risen. Tesla's argued that lower prices are needed to offset borrowing costs. But we estimate that the affordability of a Tesla is actually better now than it was in 2021. Wow! With IRA credits, Tesla vehicle affordability has significantly improved to these prior periods. That's crazy. So they're basically arguing that FSD, or sorry, not FSD. They're arguing that a Tesla, let's see here, arguing Tesla is, a Tesla car is more affordable today than it was in 2019. Fuel savings. Given about 2/3 of U.S. housing units had a garage or carport, we believe the savings on fuel costs would be compelling. Blah, 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 blah. So basically, they're a big fan. Once you factor in credits, service, considering credits, service, fuel, etc., even with higher rates, Teslas are more affordable today. That's their argument. Yet sales are declining or flat. Yikes. So that's an interesting piece there from Goldman, and that kind of aligns with what you're seeing over at Morgan Stanley on Tesla. Wall Street's a little pessimistic right now, if I do say so myself. All right. So let's take a look at the pre-market. Somebody's like, I'm going to move to LA from New York. Any neighborhood recommendations? Yes. Don't live in LA. I'm sorry. I despise LA. Okay, so, like, I'd rather live in New York all day long than live in LA. Can't stand that place. Okay, so CrowdStrike 20. I mean, I guess maybe if you were like in the Palisades, but that's also insane. But everywhere else is just like traffic and hell. At least let's see what the poll was. And New York Times, California election primary. Maybe they finally got rid of Gascon, the guy who doesn't prosecute crime in LA. Oh, no. 51% of the votes in, and they're going to reelect his butt. So dumb. California, what are you doing? No. It's so painful. Even Casey Neistat return. I don't blame that at all, man. Tampa, come to Tampa? I wouldn't come to Tampa. I'd come to Clearwater or St. Pete. That I like. I guess you could call that Tampa adjacent. I like that side a lot. I don't know. Me and Tampa, we don't really get along, okay? Anyway, CrowdStrike up 22% here in the pre-market. Palantir up 9%. MicroStrategy up another 8%. Supermicro another 5% because you can't stop it. That means ARM is up again another 2.8%. And if you flip to the downside, you've got Tesla down 81 bips. Dave was up 64% yesterday. And yeah, you got to be at the beach, St. Peter, Clear, of course. Pinellas Park. Why do you always trash my city or state? LA is not just West End. Because I can say whatever the hell I want. It's my opinion. Would you rather me lie to you and say, LA is great? Look, if I look at LA, I hate LAX. Santa Monica's nice, like, from the promenade down. Okay? Hawthorne, Torrance, Long Beach, Pico Rivera, downtown LA, East LA. I hate it all. There are parts of Glendale that are actually nice. They're pretty nice parts over there. Maybe Pasadena, but like Burbank. I don't know. I don't like these. It's just my opinion. That's it. It's just, I think it's bad management by LA. You know, I know some are better than others. I just don't like them. I'd rather be in Anaheim or Irvine. Irvine's great. Newport. These are beautiful areas. Go down to Oceanside, San Clemente. Beautiful. San Diego, beautiful. La Jolla. I know it's La Jolla. La Jolla. I always joke. Carlsbad. Santa Barbara, San Jose. You know, these are great areas. Paso Robles. I love California. I think it's great. But that's just my opinion. Compton. Hey, it's an opportunity zone. I'll give you that. All right, so we get some tax benefits. I don't know if it's George or Jorge, but whatever it is, man, I'm sorry. I'm sorry, okay? I'm sorry. I'd poop on LA. I just don't like it. You're saying ew, Orange County. This is like, y'all fight over there or something? Robert says it takes 45 minutes to drive 15 miles. That sounds like it's a good day. All right. We got to get off that. This sounds like an SNL skit. That's funny. All right. Oh, I ain't moving to Florida. That's too hot for me. I need the weather. I like the California weather too much. So does Lauren. All right, 2 minutes to the bell. So, what do they have? Nothing. A golf commercial. Boring. What does the stock market have? Well, the stock market has AI to the moon. You can't fight it. You can't fight it. It's crazy. Can't be fought. So, all right. What else? Powell's in 32 minutes. Bell opens in 2 minutes. Gone through some Tesla updates here. GDP now. I think that comes out at like 8 or 9 California time. So I'm going to kind of keep an eye on that one. Another one does come out today, which will be interesting. We talked about the ADP jobs report. Let's see here. We've got, a minute to go here to the bell. So let's listen in.
These names, Jim, are trading lower pre-market. ANF, Ross, JWN, Foot Locker.
Yeah, there were a lot of... No, Foot Locker just said directly, this is Mary Dillon who ran Ulta. Now, this stock had just doubled, so it was a question where it could go. This quarter actually very good. Same store, very nice. The inventory is good. Pushed out a plan that I thought was going to be for extreme profit in 2025, maybe up to 2028. But I want to say this. Mary Dillon is a seasoned pro, and she will get it where it has to go. I felt that Nordstrom really had terrible things. I mean, wow, cautious consumer, -1 to 2 same-store sales. Have to wait for the special big sale in the second quarter. Nothing good. I didn't mind, but the problem is TJX is forfeited.
Yeah, we'll get to a few of the other retail names we got last night and today. Let's get the opening bell and the CNBC Real-Time Exchange. And the big board, fintech firm Atlas Clear, celebrating its recent listing via SPAC at the NASDAQ. It's the 15% pledge, calling on companies to dedicate 15%.
All right, look at that. You've got like 90% of the stock market green there. Tesla was green for about 2 seconds, and now it's red again. The Qs are up 1%. Can't beat them. Can't beat them. You've got Super Micros up 5. Nvidia up another 2, though you got a red candle here. JP Morgan Dorgan. Look at JP Morgan, folks. Straight up since October. Wells Fargo, straight up since October. Microsoft, straight up. Apple's bouncing off the Fibonacci's. Wingstop, stupid, ludicrous. But it's going to the moon, so oh well. Trade Desk getting rejected there at 85. Let's see how our good old BTCs are doing. Bitcoin back at 67. We got rejected at 69, and you went straight down to 59. Got lifted by the support, and now you're basically knocking on the door of 69 again. It's been an entertaining ride. Looks like some people are buying the dip on Tesla. The level of negativity is substantial right now for Tesla. That is faux show Sure. Tesla still green or still red. It's trying to bob green though. Let's look away. Apple's trying to go green. Palantir's only up 7% here. You've got CrowdStrike coming down at the open there. You have Triple Q short coming down. ARMS coming down at the open. MicroStrategy up. You've got AMD. AMD pushing another 3%. Holy smokes. Trade Desk bobbing around. Salesforce 2%. Snowflake 1.4. C3 AI 3.2. Lemonade 1.4. Hims and Hers down 3.3. Enphase up 3% doodles. 3% of doodles here. Sunrun 2%. Dropbox 121. Yeah, Tesla's still red, and BTC at 67. Okay, let's see what some of the news is here in the morning. We've got 27 minutes to go before the JPOW stream, so we will be covering that in a separate live stream. We'll be doing that on the main channel. That does mean we're going to go do a short course live, and we'll do that probably at about 6:40. So we'll probably go another 6 minutes or so here. And yeah, I'll take it from there. Okay, good. Let's listen in briefly here. Let's see what we got. Keep in mind, if you have not yet, the price for the Millionaire Symposium is going up Friday at 1 p.m. That's because we're making another speaker announcement. That's going to be, I want that to be the greatest 3-day event ever. And if people really like that event, the 3-day event, maybe we'll do another one in the future. But I'm pretty excited about that event. It's selling more than we expected and faster than we expected. And so we're actually looking at potentially getting extra capacity compared to where we're tentatively expecting to go during those dates. So, yeah. All right, let's listen in here for a moment.
George just had so much fun with it. I mean, well, look, when you have numbers like Kurtz, who has by far now, we realize, the best suite, and you have the bad guys using AI and he's stopping them, it's a feel-good story.
No, it's not. No, it really isn't a feel-good story. You know what it feels like? It just feels like Elon's fighting because he's kind of pissed that his AI isn't doing as well as their AI. Like, I hate saying that, you know, because I like Elon, but that's what it feels like. It's like you feel like a bitter child who's upset that everyone else is winning in AI and you've been trying with FSD for, 7 years and you're not. As an example, I've been in Tesla stock for 7 years under the premise that, oh yeah, FSD is amazing. And version 12, overall for me, I trust less than I did version 11. It's a setback. It's sad. So, as somebody who's been driving it for 7 years, it's a little bit of a pisser, honestly. Oh well, what are you going to do?
Get those parts separated and maybe see what happens.
There's too much SOTP in David. Adjusted EBITDAs, man.
No, actually, Amazon is not developing their own humanoid robots. You have to read that article a little bit more closely, and you'll see that they're partnered with a company called Agility, and their humanoid robot is called Digit. See, if you go to ehack.com, you would read exactly that already. You wouldn't have to even go search for other articles. You would have seen it all at ehack.com. I'm serious. Go to well, take a look at this. Let's see here. James Duma said V12 is going to be 100x reduction in interventions compared to V11. I don't know what you're smoking. There you go. Agility Robotics posted about that yesterday. First of all, I think it's worth noting that version 12 for Tesla, like, I basically never had interventions on 11. Very rare. Now, I find myself just driving more. And, like, subconsciously, I'm driving more. Because one time it did something really stupid. And I'm like, I'll just drive. So, and I rarely drive. I mean, I'll drive again today. Because I have to go to multiple hospitals. God frickin'... Get your children out of the hospital. I was down to 1 kid in the hospital. Now I'm back to 2 kids in the hospital. Crazy, man. It's just crazy. Anyway. So... Yeah. Yeah, I think, I hate to say it, but I'm not trying to say it, like, I don't have as many miles as, like, these FSD YouTubers or whatever, and I have nothing against them. You know, I'm a fan. I think it's great, you know, be transparent or whatever, show whatever. But, you know, my living isn't based off showing off this technology, and I'm not trying to imply bias or whatever. If anything, I'm biased for Tesla, given, you know, my exposure to Tesla. But it's just not the experience that I'm having. I'll just leave it there. So I'll try it again today. You know, maybe I just gotta video it. You know, even if I just handhold the sucker on a wide-angle lens, I'll try that. I'll just go see if it can get me there. And it should be a pretty easy drive, what I have to do today. It'd be a roundabout, right, and I don't even think there's going to be an unprotected left. So I could just not touch it, and then I'll show you what I see. And I'm not optimistic about it. I was more optimistic about being able to do that on 11 than 12, so we'll see. All right, anyway, so what else here? I don't have a GoPro with car mount because I'm not an FSD, you know, YouTuber. I provide the news, bro. So looks like you got a bunch of red over here. New York Community Bank's back at $3. You've got Tesla -1, Rivian's -0.7. You've got let's see here. Palantir 7.4, Supermicro's at 4. These are all to the upside. C3, even C3AI is doing great. That's when it's a pisser, you know, when like crap like C3AI is doing so well. You know, go to the month chart on this. Like, this company is doing relatively so well over the last year, right? So, very interesting. All right, so let's see here. It's a time to buy lower. Isn't FSD 12 supposed to be slightly worse? I mean, no. Like, if you're going from code to a neural net, you know, I guess the idea is, oh yeah, we're going to take a step back before we take a step forward. I mean, maybe, but I don't know. So, all right, I got to go to the course member live. Let's jump over there, and then we'll do some more commentary, and we'll do, you know, whatever else. And then we got to be there for JPOW. Do you have the ability to get some work done while at the hospital? Not really. Doctors just keep coming in, which is fine. But I'm tired of this. Okay, I'll tell you what I'm really tired of is I'm in the ER yesterday, and the pediatric doctor's talking to me, and then she's like, "Oh, are you in the medical field?" Like, after talking to her for 3 minutes, I'm like, "No, I just have 7 children, and I'm tired of being in the freaking hospital." She's like, "Sorry, bro." I'm just kidding. I didn't actually. I wasn't, like, mean to her. But, like, this is, like, freaking exhausting. So, all right, push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Somebody says, what's your IQ, Kevin? You know, I did 2 tests the other day. Let's see if I can get this right, if my memory is right. I took a COVID test and an IQ test. I passed my IQ test, and I got a 70 on my COVID test.